Here is something that hasn't happened in a while. GTA home sales just turned positive year over year. March 2026 TRREB numbers are in, and for the first time in months, we are actually selling more homes than we did at the same time last year. But before you think the market just flipped, I need to show you why that headline number is only half of the story. Because while sales are up, prices are still down, and while spring market is waking up, homes are still sitting 27% longer than they were last March. And the condo market still getting hit very hard. This is the most split market I've seen in years. Freehold low-rise housing is recovering, condos are still bleeding. And if you're buying, selling, or even just watching the market, the property type you focus on completely changes the playbook right now. I'm going to break it all down for you today, year over year, month over month, and by property type. Let's get into it. By the way, this video is part of an exclusive collaboration with top real estate YouTubers from across North America. We're each breaking down what's really happening in our local markets, the stuff you won't hear on the evening news or read in the generic market report. If you want a real inside look at what's going on beyond your city, make sure you check out all the videos linked below. These aren't random creators, these are people who know their markets inside and out. Let's start with the year over year picture. March 2026 versus March 2025. Sales came in at 5,039 transactions. That's up 1.7% from the 4,956 sales we saw in March of last year. Small number, but the direction matters. We've been underwater on sales comparison for a while now. So crossing back into positive territory heading into spring is an important signal. Average prices are landing at about $1,017,796, down 6.7% from March 2025's $1,090,372. Now I know that sounds rough, but here's what I want you to notice. We're holding above $1 million. Prices are down year over year, but they're not in freehold. If you remember, at some point in January, I believe, or February, we saw average prices dip below $1 million. The floor appears to be forming right around that $1 million mark. New listings are down 16.7% year over year. Sellers are still cautious. A lot of people are sitting on the sideline waiting for the stronger signals before they can list. Active listings are also down 8% year over year at 21,596. And here's the stat I really want you to pay attention to. Days on the market. Homes are sitting 29% longer than they were a year ago. The average days on the market is 47 days right now. Last March it was 37. That's a significant difference. It tells you that even though spring activity is picking up, buyers are not rushing. They're taking their time, and that gives buyers meaningful negotiation room right now. Now let's look at what's actually happening between February and March, because this is where you really see the spring market activating. Sales jumped 30.3% from February to March. That's a massive single month move. And what's interesting is that new listings are also jumped up 34.9%. So supply came in heavy too. Nearly 14,500 new listings hit the market in March versus just under 11,000 in February. Here's the part that tells you that the demand is real. Even with all that new supply coming in, days on the market still dropped compared to February. We went from 54 days average in February down to 47 days in March. Buyers are also absorbing the new listings. They aren't just sitting back and waiting, and that's the healthy dynamic. Prices barely moved month over month, up less than about like 1% from just under $1,009,000 to $1,017,000. And I think that's actually the most important thing to understand about where we are right now. The volume of transaction is recovering, buyers are coming back, but pricing power has not returned yet. Nobody's in multiple offer situation with crazy escalation clauses right now. The market is finding its footing, and the spring season is the test of whether that continues or not. If April and May continues to show improving sales and stable or rising prices, we'll have a real confirmation that the bottom is in. Stable or rising prices, that's important. Okay, now let's talk about the property type. This is where it gets really important because the headline numbers hide a massive split depending on which property type you're looking at. Detached homes are the clear winner right now. Sales were up 5.2% year over year. That's the only property type posting positive sales growth versus last year. Month over month, detached sales also jumped 32.8%, and the average price actually ticked up 1.3% from February to March, landing at 1,342,375. Why is detached outperforming? A few reasons. First, there is structurally low supply. Builders are not building freeholds anymore. Detached sellers don't have a lot of compelling options to move to, so many are holding and not moving. That keeps inventory tight and prices supported. Second, the buyers who re-entered the market when rates started dropping and affordability started improving are going straight for ground level housing with space. And detached in the 905 is their primary target. 905 detached sales specifically were up 6.5% year over year in March. That's a number worth highlighting if you own a detached home in the suburbs. Condos. Condos are the most complex story right now and the most important one for a lot of people watching. Sales are technically up 1.7% year over year, so volume is recovering. But the average price is still down 9.1% year over year at $620,000. And month over month, condo prices actually slipped another 1%, even as sales improved. Here's what's driving it. We have a significant investor exit happening in the GTA condo market. A large portion of condos were purchased by investors during 2020 to 2022 run-up. Many of them financed at much lower interest rates of 1.5%, 2%, and now they have to refinance or renew for higher rate. And with rent softening and carrying costs elevated, these investors are cash flow negative and they're selling. That's flooding the resale market with supply. On top of that, new pre-construction condos completions are at the all-time high and they're hitting the market at the same time, adding even more listings and competition for the condo owners. The result is exactly what you're seeing in this data. More supply, less urgency from buyers, and prices getting pushed down. If you're a buyer, the condo market right now gives you the most negotiation room of any segment. If you're an investor thinking about jumping in, be cautious because the supply pressure is not going away anytime soon. Townhouse is honestly the quiet strength of this market. Sales are down just 1.7% year over year, essentially flat, and month over month they were up 25.5% with prices edging up 0.6%. They're sitting in a sweet spot right now. More space than a condo, more affordable than a detached, and without the investor overhang that's dragging condos down. At around $850,000, townhouses are attracting families and move-up buyers who can't quite stretch to detached properties. Okay, so what does this all mean? The GTA market right now is two markets running side by side. If you're a detached or townhouse space, especially in the 905, the picture is improving. Buyers are coming back, supply is tight, and prices are stabilizing. If you've been waiting to list, the spring window is open and the demand is there. Price it right and it will move. If you're in the condo market, whether you're a seller or buyer or an investor, this is the segment that needs the most careful thinking right now. Sellers are competing with a lot of inventory. Buyers have leverage, but they're also buying into a segment that hasn't found its floor yet. And investors need to be honest about the carrying costs versus the rental income reality in today's market. Rental market, we know it's going down, so you gotta make sure how much you gotta top off every month. For buyers overall, the spring market is active, but you haven't lost your window. Days on the market are still meaningfully higher versus last year. You have time to be thoughtful, get pre-approved, know your number, and be decisive when the right property hits the market because the pace is picking up for sellers. Accurate pricing is everything right now. Homes that are well priced are moving. Homes that are overpriced are sitting. And with 47 average days on the market, buyers can see very clearly when something is overpriced relative to the competition. The bottom line, The market is recovering, but it's uneven. It's property type specific and it's neighborhood specific. One data point doesn't tell you the whole story. That's the March 2026 TRREB breakdown, year over year, month over month, and by property type. If you found this useful, drop a comment below and let me know what you would like to see covered next month. And if you're actively in the market right now, buying, selling, or figuring out whether it even makes sense to move, hit the link below and let's have a real conversation about your specific situation. Because general market data is one thing, but your neighborhood, your property type, and your timing are a completely different conversation. Like, subscribe, and I'll see you next month with the April numbers.